Metro Vancouver's condo market is facing an unprecedented crisis. Imagine a city where luxury towers scrape the sky, yet thousands of brand new condos sit empty, silent witnesses to a spiraling financial meltdown. A city where the dream of home ownership has turned into a developer's nightmare, leaving investors bankrupt and families trapped. This isn't a fictional dystopia. This is Metro Vancouver right now, and what's unfolding could impact every resident for years to come. Over the past year, Metro Vancouver has witnessed an extraordinary collapse in its new condo market. What was once a red-hot hub of speculation and rapid wealth accumulation has become a frozen landscape of unsold units and mounting debt. Today, we're diving deep into this crisis, exposing the numbers, the human stories, and the political battles behind the biggest real estate bust this region has seen in decades. We'll show you why this isn't just a blip, but a fundamental shift that's shaking the foundations of BC's housing landscape. Just a few years ago, between 2020 and 2022, Vancouver became ground zero for a condo speculation frenzy, unlike anything seen in decades. Investors, flush with pandemic savings and borrowing at rock bottom rates, bought units sight unseen. Pre-construction sales centers saw massive lineups, and developers launched towers before even breaking ground, confident they'd sell out in weeks. And they did. By early 2022, a typical one-bedroom condo in downtown Vancouver was selling for over $700,000, with 2 bedrooms pushing past $1 million. Investors weren't focused on living there, they were focused on one thing: flipping the contract before closing and pocketing $100,000 or more, often without ever taking possession. This wasn't just downtown. Burnaby, Coquitlam, Surrey Bay, every municipality with transit access became a target. According to Rennie Intelligence, investors made up 50% of all condo buyers between 2021 and 2023. These weren't families looking for homes. They were speculators, treating real estate like a stock portfolio. But then, the break came fast. By March 2022, the Bank of Canada began aggressively hiking interest rates to crush inflation. The overnight rate, which had been at a paltry 0.25% during the pandemic, rocketed to 5% by mid-2023. Mortgage rates followed suit. A buyer who could afford a $3,500 monthly payment at 2% suddenly faced $5,000 or more at 5.5%. The math stopped working overnight. Demand evaporated, and investors who had counted on flipping contracts found no one willing to buy. Pre-sale deposits, often $50,000 to $100,000 or more, were suddenly at risk. Many walked away, forfeiting their deposits, rather than closing on properties they could no longer afford. Today, the numbers tell a stark story. More than 2,500 brand new condos sit empty across Metro Vancouver, double what it was just 12 months ago. According to the Canada Mortgage and Housing Corporation, about 2,500 new completed condos are sitting unsold and empty, a figure some real estate experts predict could hit 3,500 by year end. These unsold units are heavily concentrated in Burnaby, Coquitlam, and parts of Surrey Bay, the very suburbs where developers went all in on investor. Focused units, we're talking 450 to 500 square foot units optimized for price per second square foot, designed to maximize rental income for absentee owners. The problem is those investors are gone. With higher borrowing costs and new regulations, investor participation has collapsed from 50% of buyers to just 7%. The market developers built for no longer exists. Developers are now throwing out desperate incentives to move inventory, free parking stalls, storage lockers, cashback on completion, and even flash sales with discounts of 25% for a limited time. A 25% discount on a brand new condo fee. That's how desperate things have gotten. Older condos in the resale market are actually selling better because buyers looking for actual homes prefer buildings with better floor plans, more square footage, and included parking. For developers, this situation is nothing short of a slow-motion financial disaster. Companies are laying off staff, and projects are going into receivership. West Group Properties, one of Western Canada's largest private developers, announced it was cutting 12% of its workforce. Rennie Group, the condo marketing firm that practically wrote the playbook for Vancouver's pre-sale market, laid off a quarter of its staff. The situation is even grimmer for others. Thin Properties, a major Burnaby-based developer, has seen multiple projects placed into receivership over the past year, with lenders claiming tens of millions in defaulted loans. In one instance, a 34-story tower is 95% complete, but construction has stalled due to financial shortfalls, with all 335 units sitting empty, accruing interest at nearly $54,000 per Dalton Y. The insolvency wave is accelerating, with bankruptcies in the real estate and construction sectors up 43% year-over-year. Housing starts dropped a staggering 59% in March 2020, 5% compared to the previous year, and province-wide construction starts fell 25% in the first half of 2025. The pipeline of new projects is drying up because developers can't meet the 50-60% pre-sale thresholds required for financing. On top of this, Anne McMullen, president and CEO of the Urban Development Institute, stated bluntly that condos cost more to build than 80% of Metro Vancouver residents can afford. Land, labor, and materials have all skyrocketed, and government policies, from development cost levies to energy codes, add further burden, making it impossible for developers to lower prices without taking massive losses. The pain is personal for condo owners and investors. Consider the investor who bought a pre-construction unit in Coquitlam for $650,000 in 2021. He was told it was a smart move, but by the time the unit completed in early 2024, comparable units were listing for $620,000. He's underwater by $60,000 before even renting it out. After dropping the rent multiple times, he finally found a tenant at $2,100. But his total carrying costs are $3,200 a month, leaving him losing $1,100 every single month. According to mortgage professionals, nearly 81% of leveraged condo investors in Vancouver are now in negative cash flow, with an average monthly loss of $597. The assignment market, once a golden ticket for investors, has collapsed, with contracts now selling for 10% to 30% below the original purchase price if they sell at all. Many are forfeiting deposits of $100,000 or more, marking some of the biggest financial losses of their lives. These aren't isolated stories. They are playing out across Metro Vancouver, turning dreams of passive income and easy wealth into a financial trap that's destroying lives. The rental market offers no relief either, as average asking rents for a 2-bedroom condo in Vancouver fell by $270 monthly in 2020. 5, creating a vicious cycle where property values fall and rental income shrinks. Caught in the middle of this mess is Premier David Eby, who made housing his top priority upon becoming premier. He implemented aggressive anti-speculation measures like the speculation and vacancy tax and pushed back against calls to loosen restrictions on foreign investment, stating that the model of foreign capital building empty housing is dead. However, his stance has put him at odds with the federal government. Federal Housing Minister Gregor Robertson, Vancouver's former mayor, stated he does not want to see home prices decline, focusing instead on building affordable housing without upsetting the apple cart of existing homeowners' assets. Premier Eby, on the other hand, aims for provincial policies to actually bring down the cost of land and home prices. The political optics are brutal, with Eby, who once railed against developer influence, now finding himself attending industry luncheons and defending a housing strategy that appears to be failing to deliver. Vancouver is building fewer homes per capita than it did 50 years ago. Despite double the population, the Metro Vancouver condo market is navigating uncharted waters, filled with both immense risks and, for some, rare opportunities. While the overall picture is bleak for well-qualified buyers with strong finances, current market conditions are the most attractive they've been in years, offering significant negotiating power. Whether you're an existing homeowner facing renewal, a first-time buyer considering your options, or an investor weighing your next move, understanding these complexities is absolutely crucial. Don't navigate this volatile landscape alone. If you're looking to make an informed decision about purchasing a new property in Metro Vancouver, expert guidance can make all the difference. Call me today to discuss the current market situation and how it impacts your unique needs. I can provide personalized insights to help you make the best choices. Don't wait for the tide to turn. Get the clarity and support you need. Now,